Futures point to a flat open in front of retail, same-store sales, and jobless claims. The earnings calendar is still busy, but investor attention will be focused on the employment situation report this Friday. I'm Taylor Schranz, and the Morning Call starts right now.
Good morning, everyone. I'm Evan Lazarus with T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call. We've got a big day on tap, guys. We've got jobless claims, a slew of earnings reports, still same-store sales, but it seems like everyone's sort of sitting on their hands until that all-important employment situation report tomorrow. So let's take a look at the SPX over the past 3 days before we get into our plan today.
Okay, that sounds like a good idea. Let's look at the S&Ps here. So what do we want to take from this? Well, about a week or so ago, maybe about 8 trading sessions ago, market looked like it was about to see lower prices. We held the previous low, and we are right back in a matter of a couple of days to just about previous highs, a stone's throw. Yesterday, 2 days ago, market made a rally attempt up, but closed the day rather weak and trading back into the average here. So really a mixed bag. I think traders are on the sidelines for tomorrow. What we really have here, and I think the point that I really want to address, is this 21 period EMA, which again is a very technical thing, but I think worth looking at. If we go back to the chart, you have this flat 21 EMA. This is the orange yellowish line here that you see, and it's roughly trendless, basically sideways. That to us points of a trendless market. And then when you see this, what it generally means for traders is that you're going to have that ping pong effect, back and forth, back and forth. And while it's very, very tempting to want to be long at highs for a breakout, it has a much higher failure rate. So, traders are sort of on the sidelines here, expecting we might trade back lower, just like we traded back higher here at previous lows. So it's this trend, trendless sideways range-bound market that I think we need to really keep our eye on here. And I would be very, very cautious about getting overly bullish at the highs. It can be a very dangerous trade.
Right. Well, it's really tough for you guys too because there's virtually no volume and there's no volatility. So for the momentum guys, there's just really not that much to go on. And I think being sitting on the sidelines and doing nothing into the employment situation report where the numbers get revised, it's unbelievable to me that there's just no action and everyone's sort of sitting on their hands to see what this number.
Well, you said it. The key is volume. Volume is the engine. You need to see, not only do we want to see new highs, new highs is just one small part of the equation. You want to see new highs with volume. You want to see enthusiasm. You want to see the market say, hey, it's time we're going higher and we're involved. New highs on very, very light or declining volume is always a suspect and has, again, higher failure to reverse. So keep an eye on that into tomorrow's number.
All right, we're going to look at the refiners in the sector spotlight. There's a lot going on over there. We've had the Conoco news where it's spinning off its refining business to Phillips 66. Then we also have Delta come out and buy a refinery from Phillips 66 so that they can refine 75% of their fuel. That's going to be really interesting to see how that plays out. Now, even an airline company that typically doesn't have the best management track record on the airline side, but then to go and pick up managing a refinery, just so many metrics involved. So we're going to see how that plays out, but it could be interesting to see what happens over the next 5 to 10 years because if this is a trend that sticks, it's really going to change the industry overall. So let's take a look at Conoco. There's a lot going on in that space.
Headlines drive, but what we really need to pay attention to always is price. And, the headline came out yesterday, price did not react well. Market sold off pretty hard. You can see the volume rising here in Conoco as this downtrend starts to really become more aggressive. We do need to respect the fact that we are approaching previous, pivot lows. If you look back to the left here, you'll see in the, the lower 50s, somewhere in the 51 to 50, 53 area. We do have that sort of prior support that we're going to pay attention to. How price reacts there is going to be key. But for right now, it's a hands-off trade. No reason to start to commit capital because, again, if the market tells you it doesn't like it, don't try and be a hero.
Well, here's another one too. ExxonMobil, ticker XOM. That's another one when the market's just not liking it right now. It hit a 52-week low yesterday, and usually that's been a name that pays that healthy dividend where investors sort of go to when you're in a trendless market or sort of like a cyclical downturn.
Well, Exxon looks a lot healthier to me from an investment standpoint and from a trading standpoint than any of the others. You can see here on the chart, flirting with breaking out that 88 level, which we've seen multiple times going back to January. 1, 2, 3, 4 attempts to try and break out. At some point, something has to jar this loose. It's either going to break out from this level or it's going to fail. So we're going to look, we're going to keep our eyes on Exxon for clues. Again, we want to see it, break through 88. We want to see volume rise. You want to see that engine, really tell us that Exxon is best of breed and wants to go higher, sitting at highs, but not necessarily making, much headway.
Moving along to CHK, this has been just an absolute mess. It was one of the worst performers in the S&P yesterday. There's so much going on. They're a scandal-ridden company. We had the CEO and chairman position separate. It's one of those names almost like an Amazon or Netflix can't get out of its own way.
Yeah, well, markets don't like this kind of stuff. They don't like, shakeups. They don't like when CEOs do bad things.
Right.
Case in point, BP a few years ago with the oil spill. When things like this happen, generally you see chaos in price. And that's what we're seeing here with Chesapeake. Big volume, you could see the enthusiasm taking this lower yesterday, substantially lower. If we go and we look at longer term charts, weekly and monthly charts, just to get an idea of a multi-year, bigger picture story, the first level of support that I think Chesapeake is going to try and, hold will be down here. That's right around the $12 to $13 area. Below that, lows, the 2008 lows, which were $10. So I wouldn't necessarily step in for a trade here. It seems to me like it's still probing for support and probing for lower prices. So be very careful with this.
All right, let's wrap it up with Valero. This is another name yesterday that rejected its 50 DMA.
Valero. Well, again, not a healthy story here. We look at the chart longer term, just to get a sort of a macro. Hasn't really done much over the last, 3 or 4 years. Since the 2008 lows, we've seen price go from roughly, 12 to 30, but really no enthusiasm. We're not back at highs. Highs are way back here at $80. So this is one of those stories that's telling you, relatively weak, has been in a multi-year base that's been low level. And I suspect that, if this sector really starts to push lower, this is going to be one of the names that, will probably drive lower very, very fast. And again, even here on the daily chart, short-term story, really nothing to talk about.
Right. Well, it's quite clear that the refiners are in a secular downtrend, so I think we have a lot of room. There's just a lot of work that needs to be done within this particular group. We're going to go to a quick commercial. When we come back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the Morning Call. We're going to dive into the trenches and look at some unusual momentum names that we don't talk about on the Morning Call as much. We're going to look at the automakers and the auto part companies. We're going to kick it off with Ford. This one, 11, is a really key level that we're going to take a look at here. It had a really nice beginning of the year when it announced that dividend. They're going to start paying the dividend again, but $11 right now is really what we need to focus on.
Well, interesting story here. While the presidential candidates are out on the road touting the the rebirth of Detroit and the revival of the auto industry, we need to pay attention to what these charts and these stocks are really telling us, the movement of price. Are these safe places to put money? Are they good trades? What are traders doing and thinking here? Yes, we have seen Ford come back from the 2008, 2009 lows, from basically death to revitalized stocks, trading right now around $10, $11. But the shorter term picture, again, for those that are really more active in the marketplace, we does look like we built a very, very substantial top here around $13. You can see this long-standing base, multiple hits along 13, finally starting to break down. We have this open gap here. We could see back to the $10, even sub $10 mark, depending on what happens. Obviously you have GM's earnings this morning. Right. We'll see how price reacts. That'll obviously be a catalyst for short-term movement, and we won't really know that until the market opens this morning. Speaking
of GM, it just reported before we got on the Morning Call, and they beat versus consensus, but the problem there is European sales were really not that good, and we had a big one-time charge as well.
Well, same chart, GM and Ford, identical looking here technically. Starting to break down, starting to see some sellers step in. Your averages are pointing down. Let's take a look real time here at what GM is doing post earnings. So you can see a quick spike off the earnings release. We saw a spike high as much as almost 24.5, trading back to 23, which is basically where it closed. So not much of an event here. This quick reaction move has been sold back down. So the market really telling us really not much to do here, not much to say. There's really not going to be, at least as it stands right now, obviously the market's not open, not much structural change here to this chart on this earnings
Well,
report.
it almost seems like the market had it priced in because we had auto sales out yesterday, so there was commentary on it already. We're going to move along to the auto part names. This has been a really exciting sector to watch because people are owning their cars longer because the economy hasn't been as healthy as it was 10 years ago. So we're seeing longer, owning your cars longer. So obviously it makes sense for the auto part names. But we're going to see a tale of two, what's the expression? I can't think of it. A tale of two tapes with two names and then Pep Boys, which is clearly underperforming the sector. We're going to kick it up with ORLY, which has been an outperformer.
O'Reilly's one of these names that hasn't really been on my personal radar. I haven't been watching the stock up until maybe a month or two ago, and it has been nothing but up and away for O'Reilly. Now, I wouldn't necessarily be a buyer here. I wouldn't be chasing price for anything other than a quick trade. You can see we're building a nice base up here, a nice high-level base, and this probably will maybe see one more spike higher. So it could be good for an active trader. Right. For those that are looking to commit capital, this move is pretty deep, and to be a buyer up here, probably not the safest play. You want to wait for a pullback. But this is a best-of-breed name, and it is certainly flexing its muscle and has been for quite some time. Along with AutoZone, which
I was just going to say AutoZone as well. Let's take a look at that while we're talking about the outperformers here.
Yeah, this auto parts story has been nothing but unbelievable. We can look at a weekly here of AutoZone, and we can go back, a couple of years. I mean, really just from 2009, 2008 lows up and away. Really, rarely any pullbacks. The pullbacks have been less than mild, and that's like
inconsequential.
Almost inconsequential. Even over the last couple of days or couple of weeks, we look at a daily chart here. We had this base from March, even from March until just a couple days back. We had this just really tight base that built. We broke out of that. You could see volume come up. There's our engine. That's what we want to see. Now again, basing up here, very high level base. Looks like again, AutoZone for a quick trade could see higher prices through that 400 century mark. Keep an eye on that for a trade.
Right. Well, I mean, the thing is, the stock has performed so well over the long term, but because it's been such like a low volume market, it's really hard for you guys to trade. I mean, range bound markets are kind of tough for you guys. But let's take a look at Pep Boys, PBY. This is one that is certainly not telling the same story on the tape. There's a lot of private equity action going on here. It completely bombed on the earnings. So now Gores Group, Gores, which is a private equity firm involved with Pep Boys, wants to go back and review the financials. They were even requesting to have their management company meeting on hold. So they have time to go through the financials. It was just a complete mess.
Manny, Mo, and Jack have seen better days.
Yes.
Let's just put it that way. The stock, had been basically sitting pegged at this $15 mark. They pre-announced first quarter results, which obviously the market hated. Much weaker than expected, and the stock just, coming off huge percentage move down from 15 to roughly 11.5, and even yesterday couldn't even put together a little bit of a bounce. Buyers just don't want to be here, and I would suspect lower prices in the cards if the story continues to unfold and the story is as bad as people may think it might be.
Right.
You could see lower prices. So depending on the type of trader you are, what you want to do, it's either step aside and let this story develop
play out,
as it may, or look for that quick maybe snapback trade over a 1 to 5 day window if and when that develops.
All right, let's move along to quick hits for some quick cash. It wouldn't be morning call unless we spoke about Apple, but the tech sector overall, Evan, it's been just an absolute monster, up about 19% advancing year to date.
Yeah, it's an interesting time because this is the first time that I can recall in a long time where you see the broader market starting to perform. Dow, approaching highs, S&P sitting at prior highs, but Apple languishing. There's no leadership here. It's lost that. Again, it's a relatively short period, so we'll see what happens as the days and weeks develop. But ever since they had that monster earnings report, and it gapped up from about 550 to 620 overnight, we've seen nothing but sellers step in and take this one lower. That's not exactly what you want to see. Ideally, we'd like to see the stock be basing above the 600 mark, and then start to leg higher and approach those prior highs. But this, to me, I think, again, it's for an active trader. It's been a great intraday vehicle for some of the day traders and shorter-term players. If you are looking to commit capital here, I think you could probably take a hands-off approach. Give it some time to let this story develop. We could go lower and fill this gap. This is, like I said, back to about 555. And possibly even lower. So let's just give this one a little bit of time. It's had a fantastic run. Let's not hide behind that. it's not always going to be an instant gratification trade. And if you're looking for instant gratification on every pullback, it's going to be a very, very rocky road.
Well,
because
you're in the wrong business if that's what you're looking for.
Yeah, there's going to be that trade where, this stock has had a massive run. Give it time to develop.
Right.
It could take months for this thing to set back up. So be patient.
Right. Speaking of massive run, a couple weeks ago, actually on April 24th, when Apple reported, Scott and I focused on the travel names in the sector spotlight, and we took a look at Priceline. What a monster move this name has had. It was trading around 680-ish at that point. Benchmark came out and upgraded its not upgraded, but took its price target to 750. Scott and I were like, wow, that's a really big number to get to, and it just did it within 2 weeks and surpassed it.
It's a great looking chart. We're going to look at the bigger picture here at Priceline. It's had just a massive run, almost parabolic if you look at the monthly. Going back, you can see here, just nothing but up, 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 and up. We are approaching, previous highs at these levels. There's definitely a little bit of, I would say there's probably some sellers living up around the 775, 780 mark. Right now, structurally, this looks like it wants to take that out and go higher.
Right.
I would be slightly careful here. Again, I want to see it go through that 775 mark or 780 mark with volume.
Right.
That would be, and I think earnings are coming up just around the corner. So probably I wouldn't do anything.
Especially since it's bid up so much going into that
number. It's been up a ton going
right.
into earnings. A lot of times so far this earnings season, we've seen a sell the news type of event. So a lot of these earnings are baked in. The stock's had a massive run. Going back to just January, the stock was trading 450. It's now trading 775 in a 4-month window.
Right.
The earnings could just be a catalyst for sell the news.
I mean, it's almost like an Intel thing. It was at its 52-week high when the numbers came out. They did great, but it's the same situation.
I say it all the time. Chasing price never makes anybody money.
Right, and that's great advice. Let's move along to Google. This is a $200 billion company, the market cap. It's 10% from its lows, it's trading down 10% from its lows at about 14 times, which is a normal average market multiple. But it's like everyone's been putting their money to work in the Apples, the Pricelines, the more like sexier, trendier companies. But this one's, trading at the $600 level as well.
Yeah, this one underperforming. I don't really like this name as much. Post that earnings report 2 weeks ago, we saw a pretty big haircut. We haven't really seen buyers step back in for more than a 1 to 2 day, cash flow type of trade. Sort of basing here, if we look at the chart, under the 620 mark. In order for me to really want to get back involved, I'd like to see Google get through that 620 mark with some volume attached to it. Unless it can do that in the short term, I'd probably stay either in cash here or looking to be even short, to be quite honest. We looked at a weekly chart. I did the morning call maybe a week or two ago, just as Google was about to report. And, bigger picture here, we have this sort of rising trend line. It's been resistance for many, many, many years. And even into earnings, failing from that 650 mark. You can see every time we get into this area, and it's slightly ascending, we've been failing. And case in point again here. So I would be very, very cautious here, as we could trade back down to this lower band, which doesn't really come into play until lower 500 mark. So Google could be setting up for lower prices here.
Right. It almost looks like a Microsoft chart when you look at it over the long term, where it's like you're not going to get fired for having these things in your portfolio, but it's just been like range bound for the past 10 years. Speaking of Microsoft, we're going to take a look at that chart as well. This one's had some really nice traction. It's starting to make some moves in the consumer space. There's a publication called Verge that reported yesterday, now it's not confirmed by the company, it's according to Verge, that they're going to start bundling their X360 almost like wireless packages.
I like Microsoft. I think it's been a great trade. It's sort of come back from the dead a little bit. We really haven't, for us as active traders and looking for short-term opportunity, there hasn't been much reason to really want to be in Microsoft. But over the last couple of months, we've seen a nice rise from from 25 to roughly 32 area into resistance. Again, this is a weekly chart. This is a bigger picture, 2008, 2009, longer term, sort of fighting with resistance here. I like Microsoft. I'd give it a little more time. I'd like to see it, break out again through that 33 mark, which is recent highs with some volume attached to it. And I think you could see a nice move again. All
right, let's wrap it up with JCPenney. We've actually seen some very bullish options activity in this name over the past week.
JCPenney, one of these interesting looking charts. We saw this huge move in early 2012, taking it up to the $42 mark. Has completely been evaporated right back down to where it broke out from. Hovering with support down here in the low 30s, catching a bid the last couple of days. We saw a little pop off of 32. I probably would be on the sidelines here. Again, if it's going to set back up to be a good trade, you'll probably see it base in this mid 35 area for a couple of days, if not a week or two. And then you could potentially step in for a cash flow trade if that sets up.
Right. Well, I really think that's what the key theme is going to be, especially going into that employment situation report tomorrow. All right, guys, that's it. Have a great day trading. The next 2 days are going to be really important. Got a lot of headline risk out there. Catch Evan and the team at the end of the day as they recap the charts for us on Options Profits, Real Money, and T3Live.com.